Earnings season kicked off today with reports from JP Chase, Morgan Stanley, Wells Fargo, a slew from the banking sector. To discuss the financial sector, I want to bring in our afternoon panel. We've got Larry Tentarelli, Chief Technical Strategist for Blue Chip Daily Trend Report, and Lee Munson, President and CIO, Portfolio Wealth Advisors. Lee, I want to start out with you. We had strong results from JP Chase, better than expected. Stock moving higher. Earlier it fluctuated, but now we've got some risk on sentiment. CEO Jamie Dimon did have some comments about the economy, but what's your takeaway from the earnings that we got today?
What I look for bank earnings is I look for what the tone and pace for all the other earnings over the next 30 days. You know, a year ago, we were looking at bank earnings. They were talking about having to headcount and look at cost-cutting measures to make their money for 2024. In a year, the S&P was up double digits. I think what we saw from JP Morgan is that they increased headcount over the last quarter. I noticed that the wealth management business, a steady revenue player, that's just getting bigger and bigger. I noticed that investment banking did not fall off the cliff looking backwards. So the comments that he makes is fine, but we've also gone back to looking at stocks today. Look at Wells Fargo. They announced, and they were down at the open. Why? Because Wells Fargo isn't a great bank. They can't execute. Jamie Dimon, considered a rock star, and they know how to execute. I think we're going to know more next week when we hear from Citibank and Bank of America. Here's what I'm concerned about. I'm concerned about hearing about problems with the 30-year, the 10-year Treasury jumping up, and if we're going to have another held to maturity blow up like we did back in 2023. Not expecting it, but overall, I didn't think it was the end of the world. I just think that people need to understand, if banks are telling you they can't really see forward guidance very well, no other CEO is going to say anything but that or more.
Okay. Larry, I want to get your thoughts as well. Obviously, JP Chase shares holding up right now. They did beat expectations, but of course, CEO Jamie Dimon's made the comments that there's, quote, considerable turbulence ahead for the economy. He sees that. Lee made a great point, though, about Wells Fargo. They had mixed numbers, and there seems to be some concern about net interest income. What's your initial takeaway?
So I think JP Morgan is definitely the blue chip. So if you want to own a stock in that sector, it's JP Morgan. They did put up record trading revenue. They raised their loan loss reserve, so they're prepared for a bumpy economy. But I think really what investors are going to focus on is the guidance going forward. And like Jamie Dimon said, there's no clarity. None of us have any clarity. We don't know what the markets are going to look like in 30 days. We don't know what the economy is going to look like in 30 days. So JP Morgan is definitely the blue chip. That's the stock that you want to own if you want to own a big bank. But from a technical perspective, the big bank stocks are under pressure right now, and they would not be my first place to buy.
Okay, so Lee, I want to send it back over to you, especially with your thoughts on how do you think there are rising, kind of worries about recession risk, and it even seems like with the commentary, which he does tend to be cautious at times. He was cautious before, back in 2022, 2023, the nature of those times where we had peak inflation. We also had worries about the regional banking crisis and could there be some kind of contagion there. At the time, he also expressed worries about a potential recession. Are some of the worries now overblown in the context of when we use history as a guide, or are these warranted when it comes to the financials?
Jamie Dimon does like to get, not bearish, he likes to tell you what all the problems are because he's a banker. He's got to stay solvent. But here's what I'm looking at. I'm looking at a president who, he negotiates like a Bronx landlord. It's messy, it's loud, read Art of the Deal. He likes this extreme anchoring. So, well, we don't know what the policies are going to be 6 months from now or 3 hours from now. I think Wednesday and I think Monday tells investors, you sell at your own peril. If you want to get conned, the best way to do it is believe that all these tariffs are not just, the start of a negotiation that's going to take many, many months to happen. And I think what investors need to think about is what price would you want to buy this market at? I've done a little buying last month. I did a little buying last Friday, and I'm looking to buy more if I see S&P at 4,800 or lower, kind of the range that we saw on Monday at the lower end. But I think at the end of the day, we think that we're just going to go down the tubes, and there's been this huge permanent damage to the U.S. economy, and none of that is going to be fungible. None of that's going to stay dynamic. So I think what investors need to do, I also would not be looking at banks first thing, but I'm more interested in where are the cyclicals, where's the big tech that I might want to buy. I want to get those numbers ready because, again, we're going to have 30 to 45 days of earnings earnings where every CEO says we're pulling forward guidance, here's a question that you and I don't, nobody knows. Are investors going to freak out and bring this market down 20, 25%? Or do we all know this and we're just going to sit around and wait for things to get better and better in the news? I think the issue right now is markets are so volatile. I would really caution people, don't get caught up in this volatility. It'll end eventually, but when you see the VIX at 50 and we're not doing COVID and it's not the great financial crisis, I think people need to stop and say, hey, maybe you just need to chill out, have a predetermined number, and move on with your life.
Larry, I want to get a quick final thought from you. Do you think today's move, when you think about JP Morgan Chase, is a tactical move? Even though, I know you said you like it better, but could this potentially be a fundamental play that it would hold up in the face of economic growth scare, if not a recession?
I think JP Morgan is going to be a market performer. So basically, whatever direction the S&P 500 goes in, I think that JP Morgan will work the same way. I am seeing a lot of bullish technical signs in the past few days. So I will say this. I did do some buying in the S&P 500 this Wednesday after we got the tariff pause news. From a technical perspective, there's a lot of potential bottoming signs in the S&P 500 right now. But at the end of the day, like your other guest said, we just don't know what the next news headline is going to be. So if someone wanted to start a position in JP Morgan right now, I would look to maybe start a third of my position, move small, and then see how the markets develop over the next few weeks.
All right. Thank you. That's a great perspective there from Larry Tentarelli and Lee Munson. Thank you both. Have a great weekend.
Welcome to Blue Chip Daily, one of the industry's premier sources for high-level daily technical and trend analysis. Blue Chip Daily is ideal for both investors and traders of all time frames who want to be on the right side of major market moves and trends. We focus on over 750 large cap stocks, all major stock indices, over 70 exchange-traded funds, bonds, oil, gold, and Bitcoin. Sign up now for Blue Chip Daily, and you will get access to real-time portfolio alerts, premium Twitter page with intraday alerts and commentary, the chart of the day with best idea, daily video and report, and much more. Claim 30-day trial at www.bluechipdaily.com. Subscribe to the Blue Chip Daily YouTube channel for more technical and trend analysis videos and other content.